Welcome back, value investors. In this video, I'm going to be covering Broadcom. This is a red hot semiconductor company whose stock has really gone up over the last 12 months. Broadcom is a fabulous semiconductor company. It's expected that the AI build out is going to benefit Broadcom in a big way. Is Broadcom worth its stock price? That's what I hope to answer in this video and provide my own analysis, my own intrinsic value calculation for Broadcom, and share with you what I plan to do with the stock, whether I'm going to buy shares or not buy shares. Everything that I do is just sharing my experience with you. By no means am I recommending you buy Broadcom stock or any stock that I ever cover. Now, let's take a close look at Broadcom. Broadcom was founded in Orange County, California, more than 30 years ago. And the two that created the company had an idea of creating a company that would really focus on the intellectual property aspects of semiconductors and operate as a fabless semiconductor company, meaning they didn't have to have a foundry. Instead, they rely on companies like TSM to actually manufacture the semiconductors they produce. But they would control the intellectual property and then sell those chips to companies that wanted them. They are great at communications and have really diversified into other product areas. Now, what's super hot is AI, and Broadcom is going to participate in that AI build out. Not as well as NVIDIA, but Broadcom is going to get a share of the AI build out. Overall, the company is really well operated, just great knowledge, global company, and has become the third most valuable semiconductor company traded on Wall Street. Let me review the fundamentals for Broadcom. The company has a very large market cap of $606 billion. This pretty much has doubled over the past 12 months. The company is up 107% in the last 12 months. The company once had an attractive dividend above 3%, but with the stock price really going up, it's now 1.6%. The revenue of the company is $38 billion, and the forward PE is 28.9, which is a reasonable PE considering that Broadcom is growing and they're in a very popular industry. The analyst expectations on the company is that they're going to keep flourishing, and there's strong buy recommendations on Broadcom. Overall, I think the rise in Broadcom is really impressive, just incredibly impressive. One thing I will say is that they had their earnings yesterday, Friday, and their earnings went well. They had good earnings. They exceeded the expectations on the quarter they closed, but their forecast wasn't as positive as investors would want, and the stock went down about 7%. I'm going to value Broadcom, and I value companies based on free cash flows, and I also value them based on earnings per share. To begin with, I'm going to value the company based on the free cash flows that I expect the company is going to produce. And I expect that the first year that I'm measuring here is going to be about $20.2 billion in free cash flow. I'm going to grow those free cash flows by 10%, which is reasonable. Historically, they've grown at 17%, and they've grown the revenue at 12%. If we look at the 5 years for both free cash flows as well as revenues. So at 12%, I think that's a optimistic yet realistic number to use. After we get through the first 4 years, the long-term growth will be 4%, which will add up to $560 billion of terminal value in free cash flows. I'm going to use a higher discount rate because the company's taken on more debt, and that debt has pushed them outside of one of the metrics that I follow, which is having debt less than 3 times EBITDA. They're actually at 3.64 if you look at that ratio. So they have fallen off of that desirable balance sheet that I like. And I'm going to use a higher weighted average cost of capital. When I do so, I get a current value of all those free cash flows of $439 billion. I'm going to add the cash and take away debt and get to an equity value of $375 billion of value. When I look at the comparison between the current market cap and the equity value, I get about a 38% discount on the stock if I look at free cash flows, which is a substantial discount on the stock. Earnings per share, they are expecting $46.47 in the current year. I'm going to say a forward P of 36 since it is a growing company in a very popular space with an expected growth rate of 4%. And if I use those figures, I get about a 9% discount on the stock. When I combine the two, I end up with a 22% premium that you have to pay on Broadcom. Now, my model is somewhat too optimistic, and here's the reason for it: is semiconductors are cyclical. we'll have a couple of boom years and a couple of bad years mixed into a couple of okay years. And I'm not really including any bad years going forward, but I would say that you should expect some with a company like Broadcom. Therefore, this is not the type of company I'd be looking for a fair price on a great company. I'd probably be looking for a discount on this type of company to compensate me for the additional risk that I'm taking on a company like Broadcom. So, should I buy or not buy Broadcom stock? Well, let me summarize what I'm seeing in this company. I first want to know, do I want to be a part owner in this business? And I really like the company. I think they're a tremendous company. I also like semiconductors. Now, when I look at Broadcom, it wasn't too long ago they paid a dividend above 3%, which is one of the things that I like about the industry, but their stock's really gone up, so that's kind of gone away. The company's operated really well. Their debt is a problem. It's above 3 times EBITDA. So that's a problem. There's no discount on the stock. So I'm a seller of Broadcom. In fact, I sold all my shares in the October 2023 timeframe. I sold at a very good gain, but I wanted to take the money and just recognize a good return on my investment and felt that the price was way too high back in October. And it has since risen even more. The semiconductor industry as a whole has really gone up in price substantially just in 1 year. And I think a lot of that is the AI hype. And we'll see how much of that is going to be long term value for the company versus how much of it is hype. And to me, that's risky. I'm a value investor. I like knowing that I'm buying into a business at a good price, and I'm okay paying a fair price for a great company. But with Broadcom, there's just too many question marks. And as I mentioned, I sold my shares and recognized a really nice gain, and it was too big of a gain to let pass up. We'll see if the stock continues to go up or if the next 12 to 24 months proves that the Broadcom stock is too high and the stock price will drop. Thank you for watching my video. I hope you found it interesting.